When Nicolas came, I think half a year ago to Singapore, we had a meeting and he asked me, Frans, do you have any idea to have an interesting topic? I said, yeah, maybe let's do something different. Let's try to get some of the traders together, because that does not happen a lot in conferences. So what you see today in front of you is a carefully hand-picked panel of one of the, I think, a selection of the most esteemed global and more regional trading companies, diversified in commodities, dry, wet, agriculture, coal, whatever there is, we have it here in the panel. I think the idea is that we have a Q&A session as well, Nicolas, or not? Okay, we will try. We have on my left side, for you, right, Andrew Barker from Cargill. Cargill, founded in 1865 in the US, one of the biggest commodity traders in the world. Major business in agriculture, mainly one of the biggest grain traders as well. Bjorn works for Golden Stena, which is a joint venture between Golden Agri and Stena. Stena being one of the largest Scandinavian shipping companies with a very, very long history, not only shipping, but much more. And Golden Agri, the listed palm oil in Singapore, listed palm oil trader and producer. Michael, working for Noble. I think people living and working in Singapore all are very familiar with Noble and what's going on there. Michael runs the charter decks, commodities. I think at this point of time, you do a lot in coal, but you can talk about it later. And then Rasmus, working for Trafigura, one of the largest also private trading houses based in Geneva and Singapore. A large oil products, energy trader. All of them living or have lived in Singapore. So you can see how important the trading houses are for Singapore. I think Singapore is the largest commodity trading hub in Asia and has the ambition and I think the potential to become one of the global leading trading hubs worldwide. So let's start with the first question to the panelists. Where, in terms of countries, geographies, and which commodities do you see a major growth in Asia? So, who wants to take the first question?
Okay, I'll take it. Okay, thanks, Frans. Do I need to push? No, I don't. First of all, Frans, thank you for inviting me along to this panel. Asia is a very, very big part of Noble's business. I'll say the company was started around Asia, and Asia is where we conduct probably 85% of our business. In terms of regions, we see Indonesia as coming with tremendous growth, and obviously China will continue to grow. Plus India is a very, very big part of our business. So India, Indonesia, China, Vietnam, that's our main areas. And we see significant growth in those areas.
For which commodities?
For coal. I'm not going to talk about grain. I'll leave that to Andrew. But non-grain, we see very big growth there.
Well, I think just to add to that, I think from Cargill's point of view, I agree there. Sort of the prime areas on the dry bulk side in terms of where the growth's going to be. I think we see China particularly continue to grow on the iron ore side. When you think about the One Belt, One Road as well, in terms of what that's going to bring, I think that's also going to support the Chinese steel industry. So I think that's going to be very supportive from that point of view. If you looked at Martin Stopford's presentation this morning, it also talked about how things have been shifting over a period of time in terms of the growth in Asia, and so we see that as well. And that's also, again, why we've actually situated ourselves here in Singapore, because we've been here now for 13 years. We've grown the team from about 12 people to over 50 now. So we still believe there's a lot of growth here, potentially in Asia.
On the oil trading side, Asia, of course, is an important region. If we look at 2017, Trafigura had 40% of all the oil revenue coming from Asia, and 55% of the metals revenue coming from Asia. We see continued strong demand growth. India and China, in our view, are adding about 1 million barrels a day of demand every year, just between them. Currently, about 80% of all cars in India are two-wheelers. It just takes a small transition into four-wheelers for that to have a significant demand impact. China is now the largest car market in the world, 20 million cars sold. US has 17 million. There's quite a lot of potential there for demand growth. And if you look back from last year, 42% of cars sold in China was SUVs. So there's definitely base for growth there. And yes, we see Asia as being a continuous major contributor to our growth.
Yeah.
All right, and myself and our company are involved in palm oil production and palm oil trade, which of course is much smaller than the guys next to me. But to say it simple, Europe and US is very stable. The volumes doesn't increase, while India grows by 10 to 15%, and if you include Bangladesh and Pakistan, basically where the middle class is coming up, that's where the increased demand of palm oil goes. And palm oil goes 85%, maybe 90% even now, to food. So it's a pure food product that we are talking about. Europe and US still use for energy part, but yeah, Asia is the growing hub.
Okay, the word One Belt, One Road was already mentioned. Do you think that huge initiative has an impact on your role as a trading company, or do you see that as a positive development, a threat? What is the position?
I can start there. I mean, we already see One Belt, One Road having a demand impact on countries across Asia. To give certain examples, Pakistan, for instance, we see a strong diesel demand uptick. It's port and infrastructure construction. We see Kazakhstan and other Southeast Asian countries already increasing demand, also linked to One Belt, One Road. Looking ahead, once this infrastructure is built, there will be significant usage of what is being constructed today. So there'll be a lot of incremental demand from that, which I think everybody in this panel, anyway, probably will be participating in. Traders, which is where we are, will be needed to serve the traditional role of helping source and deliver commodities. So what One Belt, One Road, at least in our view, does, it creates new demand, it creates new pathways, new consumers, and ultimately new clients. So it's a positive from our side.
For the palm oil trade, since we are based in Asia already, we don't really see a huge impact in the direct link to the One Belt, One Road. But indirect, we think, again, the countries where the One Belt, One Road goes through, the consumption will increase, people will have more money, and by that they will eat more, which means more palm oil consumption, basically. So indirect, we believe very much in it, but yeah. For shipping, of course, it's wonderful, the full concept.
Yeah, no, I'd agree as well. I mean, in terms of, it's going to increase the wealth in the region, and so it's only going to be good for trade overall. And I think also, as I mentioned before, if you think about the whole steel business as well, that's going to be very supportive for steel products. So that's good for the iron ore trade into China.
Yeah, I mean, fully agree what everyone else has been saying. I mean, we can see from our steel clients, they're already talking about increased steel consumption because of the fact of the impact of the One Belt, One Road.
Guys, you agree too much with each other. It has to be a bit more.
try to ask more.
Okay, let's try to get some other question to get a bit different opinions. If you look at the top 10 trading companies, the aggregate revenue is about a staggering $1.5 trillion. That's huge. So obviously you guys are big. You're big charterers. you need a lot of you need a lot of charters, a lot of ship owners to work with on a daily basis. What is the position of your company? How does direct vessel ownership fit into your strategy? Because traders normally like a fast turnover of assets. So to employ your capital long term in owning terminals or owning vessels, how does that work? Maybe Rasmus, for you, because you just placed an order.
I can start. As most people here probably is aware of, we've done a fairly sizable leasing transaction in 2017 of 32 crude and product tankers. From a trading house perspective, it's not a strategic intention to employ equity into ship owning. And fact is, if there hadn't been access to Chinese leasing funding, Trafigura would not have engaged in the position that we have taken, because it's not so far, at least historically, a strategic objective of the group to employ significant equity into shipping. In terms of usage of the ships, Trafigura, if we look back in 2015, we did about 1,600 fixtures as a wet freight team, and last year that became around 3,000 fixtures. So there has been significant growth. We've had a common question from a lot of people as well. Does it mean that there will still be cargoes to fix in the market? To which the answer is very clear, that Trafigura will remain a significant spot charter of third-party tonnage. We have historically, over the last 4 years, done 80% of all our cargoes with third-party owners. And the fact that we have engaged in this leasing position, we don't expect a significant change. But what probably will change is that the composition of the fleet, in terms of we are less depending on the time charter market, you can say. But equity employed into shipping has historically not been one for Trafigura, and probably in the future will neither be.
Right. Okay. So we moved last year we moved 35 million tons of dry cargo. We only do dry cargo, and our fleet is a combination of owned ships, where we own 16, some fully owned, others in joint ventures with steel mills or other types of receivers. For us, it's all about optionality. Our cargoes quite often require optionality, where we shift the port, so we do something. So we prefer not to do voyage charter, because there we feel very limited. So we either do time charter or we use our own ships. The strategy going forward is to be asset light, and that's why we started to sell some of our ships. And the model going forward will be very much around time charter. Currently, we operate 55 ships. And as I mentioned, out of those, 16 are owned. But for us, it's all about flexibility, as things very often change.
Yeah, I fully agree with Rasmus and Michael. So let me give you a little bit different view, maybe. So what I feel and what I've seen in the last 6 years with Golden Stena is that, for example, probably one of our biggest in volume partner is actually Cargill, the wet side. They do a lot of our cargoes, right? We ourselves are doing more and more on our own cargoes, mainly on time charter vessels, a short time charter. So I think it's inevitable that we charters will be more involved in the shipping. We don't mind small owners, but we don't really want to fix small owners, perhaps. We could fix them on time charter and control the tonnage ourselves. And I think that will be a trend, of course, depends on the market and the times. But our receivers get bigger and bigger. The supply side get bigger and bigger. The ports infrastructure improve, at least on the palm oil side, which mainly is then dependent on India and China and Indonesia and Malaysia. So by that you need bigger vessels and bigger players to work with. So that's the trend I see. But we will be involved,
Yeah, I mean, from Cargill's point of view, we don't want to be ship owners. That's not our strength. And also going to Rasmus' point too, is that we don't believe that actually putting equity into the ships themselves really is what we're after. we much prefer to pay the long-term time charter or the spot time charter play. So today we have around about 650 ships, but we don't own anything. Doesn't mean to say that you don't see our names associated from time to time on the owning side. But if it was, it's more from a trading play. So in other words, looking at it from an asset play, but on a short-term basis.
And how do you make a selection of the charters? How does that work internally?
Okay, I can start. I mean, ideally, we want to fix modern tonnage, high-quality tonnage. It's the first parameter. There's a price parameter. We have been engaging with our biggest owners and uniting them in forums together, trying to say and to tell them of our intentions. The challenge at times, I mean, is that when you fix 3,000 fixtures a year, you end up in a position where you cannot fix your top 10 clients. But Trafigura is moving more and more towards sub 15 years of age tonnage, and it requires extraordinary approval if you move beyond 15 years, and we're getting stricter and stricter. Also from an environmental perspective, I mean, older ships are just burning more fuel, which is also one of the concept of and reasons for Trafigura being one of the founding partners within Global Maritime Forum, to participate and to learn, and also hopefully to be able to participate in making it a greener place.
Okay.
Yeah, I mean, for us, it's about having, reliable transport, correctly priced. Right ship is a great tool, and we use that to great extent to make sure that we weed out any ships which are substandard from a technical angle. And we have very, very rigid credit control that looks after the credit angle. So, basically, as Rasmus said, I mean, with our volume, we can't pick and choose and sort of only do business with our favorite owners. But we try to build strong relationships where the owners understand us, and there's a connection between the charterers and the people taking the decision at the owners. So it doesn't become just a numbers transaction, but actually we try to have a personal relationship. Easier said than done, but we find that works long-term better.
So for you who does wet chartering, you know that palm oil is the underdog of the wet side. Basically, if your vessel floats, then we can take it. Probably molasses is worse, but hopefully there are no molasses guys. Yeah. That is changing. As I said, our customer gets bigger. The sustainability aspect of palm oil. Just to give you an idea, when we started, there were 10 people in the sustainability department in Golden Agri. Today, it's about 280 people working in the sustainability department. So far, no one has really looked at the transportation side, but we actually have taken the decision to go with right ship as well and start implementing some kind of vetting system into the palm oil trade. I guess we have to start on a low level and then work ourselves up, just like you guys have done on the dry side. But it's becoming more and more important, even for a trade that doesn't perhaps need it. Where there is not a push from the receiver side; it's more from a sustainability, perspective, and also to follow the trends with ecologically bunker consumption and stuff.
Yeah. So I guess it's very similar to the rest of the groups. I mean, we look at risk in 3 different buckets. So we have like the credit counterparty risk. So we're really making sure that who you're dealing with, are the right counterparties that you want to deal with, and we'll keep on monitoring that on a day-to-day basis. We're also looking at in terms of the market risks. In other words, what are the changes in terms of the market conditions? So what is that risk exposure per the different size buckets? So what you've got on the Capes and the Panamaxes, etc. And then lastly, you're looking at the operational risk. So making sure that we're going for more the modern fleet, looking for the fleet which is actually better in terms of fuel consumption, and that's why we use right ship to make sure that we're monitoring that and managing that. And also as well looking in terms of not taking the F&G vessels, which are the more polluting vessels today.
Okay, that's very clear. And in terms of sidestep, in terms of technical management, I know that there are a lot of third-party managers here, so very keen on doing business with you. Is there any business out there for them to deal with you guys, or do you think you can do it all better yourself?
No, I think we're quite conscious that we cannot do it better ourselves. Obviously, ship management is maybe I dare to say sophisticated. It's moving towards more quality control. There's a lot of data that needs to be owned, and there's a lot higher and stringent requirements. I mean, we've gone through a very determined process, selecting technical managers and shortlisting technical managers for the bareboat fleet that we have coming. And we've seen and intensively been starting out with 15 different tech managers and shortlisting it down then to 5 and then to 4, and so I mean, no, tech management, it's not our business, and other people do that better than us. We're conscious of that. Yeah.
Michael?
Frans, great question. I was waiting for that question. Thank you very much. We believe we can do it better, and we are doing it better. We have started our own technical management company called Omega. Sorry to do a bit of a sales speech here, but I can't help myself. At the end of the room, please stand up, Satya.
That was not the idea of my question.
So Satya runs our technical managed business, and please have a talk with him later. We can do it better than anyone else. I have no doubt in my mind. Sorry, I couldn't help myself.
Okay. Why can you do it better than anyone else?
Because it's not that complicated. At the end of the day, if you have the right team, then it's quite straightforward. If you have someone in between, they obviously have to make a living. And that's what they do. So you leave a margin on the table. It's all about having the right team and the right contacts, which we do.
Okay, I will ask you the same question 1 year from now.
I'd be delighted.
Yeah, why not take the opportunity? I've had the last month 2 meetings with our technical manager discussing about energy management, and scared me a bit how little energy they have put in to actually look at our vessel and energy management. So I've not been the most happy person when it comes to a third-party technical manager. I think, if you're a technical manager out there, you should really help the owners and push the barrier. It should not be the owners who basically push you to look into that, right? It should come. You should be in the forefront. So maybe I should go with Michael.
Please do. We'll give you a good deal.
There we go.
Well, we have a very small technical department, and we need to have a few people, but I mean, that's not our strength. And the fact that we don't own ships today, there's really no need for us to actually grow that capacity. So we can always tap into that into the marketplace if we need it.
Okay. Maybe go to a different topic, which maybe connects to the session we had before the coffee break. Traders are logistical companies that transform commodities in 3 ways. In space, by ways of transport, time, by ways of storage, and form, blending and processing. Now, with the whole focus on digitalization, sorry for all these buzzwords, digitalization and blockchain and whatever have you, all these new technologies going so fast, having impact even on a boring industry like banking, where I work myself. How do you see that trend impacting your business model, if any, and how does your company anticipate on this? Bjorn, why don't we start with you this time?
Okay. I think you as a bank are very happy that we don't have blockchain at the moment. We were involved in a case where basically, palm oil to India, for example, it's 5-day voyage. So there's no way that the original bill of lading would end up in the port where you discharge when you arrive. And the banks, they sit on the bill of lading and they sit on the letter of credit. And if the letter of credit fails, they can always go to the ship owner with bill of lading. So if we had blockchain in that sense, that would be very nice for the ship owner, because today we discharge against LOI most of the time. So I think there is a big reluctance from the industry to actually take in a big disruptor as blockchain might be. Hopefully I'm wrong. What we have done in Golden Stena together with Golden Agri and Stena is nothing new. I think Clarkson has a very good program about it. Basically, you buy the AIS data, you put all the vessel on a map in your system, and what we do is we track all the palm oil ports, which vessel are coming in, which vessel are going out, where are the cargoes going. So we know pretty well how much cargo is going out of Indonesia and Malaysia, and we also know to a big extent what our competitors are doing. So then the question is, what do you do with that knowledge, right? And I guess there everybody's a bit struggling at the moment to implement that data. I also think that in the future shipping will be a less at least in the tanker business today, it's very personal, right? I think we will go towards a more industrial shipping, where, for example, brokers will have harder to, they have to do something really to keep the space in between the charter and the broker. Because today, I can easily in our system say, okay, which vessels are available in this port at this time. And then I could basically go to these owners and call them straight away, instead of having a broker doing that job for me. So I think we see something coming up from a chartering perspective, right? I don't believe that we will go out and auction a cargo. If I was maybe, which I suppose have so much cargo, I would probably do it. But for smaller ones, maybe not yet. But yeah, I think it's an interesting future, and I think we have to embrace it, like you all have said.
Andrew? Your view?
I mean, I think digitalization is coming at us, and if you think from a trading point of view, we've had to adapt already, because in the past traders have been able to sort of have a lot of information and be able to trade around that information. Today, everybody can get that information at the push of a button. It's all there on the internet, so you have to adapt. And so traders have been adapting and trying to see how they stay one step ahead. And it's all about also as well, what value can you bring, right? So again, sort of being in that whole space is what value can you bring into the whole supply chain. So I think traders will still be around. I think they just need to adapt. I mean, if you look at the grain, you talk about the storage. I mean, today a lot of the farmers have their own storage today. They got huge amounts of storage, whereas in the past they didn't have that. So again, Cargill as a grain company has had to adapt to those changes. And I think as we go through the whole digitalization process, I think we're going to see a lot of all changes, and we're just have to keep agile.
Okay.
I think you have to sort of also look at, I mean, in terms of digitalization and traders, you have to look back and what is the trading business and what makes a trading business successful. And at least from our side, the business model is, of course, global reach. It's significant in the past, significant investments in global infrastructure. I can give an example, and then I lead on to the answer. It's a $1 billion investment in 2011 in Corpus Christi terminal. It matures. We sold off 80% in 2014, and then you take the throughput. It's connected to Eagle Ford shale oil fields. So the business model of a trader is it's global reach and it's global infrastructure, and it's of course financial strengths and credit lines to be able to participate in a higher and more demanding market. In terms of digitalization, yes, you have to embrace it. It's definitely something that everybody has to take very serious. From our side, we think it's more additive and evolutionary, more than transformative and revolutionary. So yes, we use it in decision making, and ultimately processing time and cost are inclined to come down, and that's a positive for trading.
Okay, thank you. Michael?
Yeah, I mean, not too much to add. Basically agree with the rest of the guys here. But I think in terms of on the dry bulk, Cape, the Cape market, I think is ripe for something a bit more dramatic in terms of how it's done today. I don't think you need as many people in the chain when you charter ships. It's all very transparent. But if you get into the smaller sizes, I still think that's a market which is a bit difficult to put on a platform. You're dealing with counterparties who are not really in that mode. So it will happen eventually, but I think it's going to start with the big sizes and then it will develop.
Okay, thank you. I'm coming to the last question for this panel, and this question, of course, is more or less in every session. I would like to reserve a couple of minutes for the Q&A, if any. Otherwise, I've done a prudent job in time management. My last question is, of course, in this huge industry with so many players, we see a lot of M&A over the last few years. Do you see there's a further trend or a further need in your view of consolidation in this sector? I mean, this sector in where your company is trading in.
Okay, I'll start off. I mean, in the dry sector, so I was part of Billiton, and we did a merger with BHP, and I still have traumas from that. So it's not something which is easily done. I think very often it looks great on paper, but in reality, it's not that straightforward. We've seen a lot of activity. My view is that the market is less ripe for further mergers. There might be some, but I don't see it on a big scale.
Why is that? Why do you think the market is not really ripe for further?
I mean, I just think that the companies that where it made sense to merge have merged in the dry bulk space.
Okay, yeah. Rasmus, any aggressive M&A on your side?
I'll leave that for our CEO to comment on. But what I can say is, and what Trafigura view is, that scale and size matters. Trading, it's a very low margin business. You need access to very competitive funding, of which Trafigura has $50 billion plus of credit lines. You need global infrastructure, which is what has been invested in throughout the last many years. And I think if you have, and you need a global reach, and if you have one of these points where you're weak, chances are it's going to get more and more difficult. So what I can say is that scale matters, and that's our view. Yeah.
Okay.
Yeah, and I'd agree with that. I mean, if we look at Cargill's different businesses they want to be sizable in all those different groups. So if you think about the petroleum business, we sold that last year purely because we were quite a small player in a big pond, and to be scalable, we had to invest billions of dollars in that petroleum business, so we decided to sell it off. And I think most companies today will look at those type of things and sort of say, well, if you're not sizable, then the likelihood is they are going to try and sell some of those businesses.
What I've noticed is that the pure traders, at least in the palm oil trade, has more or less disappeared, and you only have the producer left together who does the trading like ourselves, right? So they do both the upstream and downstream, and I think that trend will continue. And I think also what will happen is that we will continue into the destination side. And buy up refineries there, buy up brand, in this case palm oil brands in the food stores, to have the whole value chain. And I think that will be the biggest change. And in order to do that, you need to have a lot of volumes and a lot of money. So that's where the energy will go, I believe.
Thank you. That leaves me a little bit less than 2 minutes for any questions to the panel. Yes. Is there a microphone? The gentleman in the blue blazer. Bright blue, because there's a lot of blue.
Thank you so much for the panels. I'm Captain Govind Kumar Gautam, CEO for the Pacific World Shipping. My question is to the charterers. As you said, like trillions of worth of revenue or in profits. The charterers are sitting on the panel, and maybe we just add another, maybe they're representing 1/3 of the volume of the world actually, maybe, just on the guest side. And I believe that here, what I see, this is a very interesting panel, that most of the side we are, as a service provider, more are sitting as the owner, ship owner. And what we have seen in the last 10 years, still we are not able to recover the cycle of the ship owners who has lost worth of billions of dollars in the value. The question comes here that how do we take the responsibility, financial responsibility, who should be responsible, where the charterers like you all are on the other side, like ADM, Bunge, Cargill, Louis Dreyfus, and on the iron ore side maybe BHP, Strata, Anglo, who do not want to invest into the shipping because you feel that that's not a core of your business, whereas without a shipping trade cannot happen. So there is a kind of a blind game going on, like where you are so much short but you're not taking any long position, and the ship owners, they think there is an opportunity where maybe with the short spike of the time and they rush with the to buy the ships, and the bankers comes in between as a facilitator to facilitate ship owning, where the ship owners, they don't have any control whatsoever on the cargo, even though do sometime a short contract with here and there counterparties, those counterparties are also not a good counterparties. So what I see that there is just so much of freight where you need to cover your positions, and you are in much more better hand to invest into the shipping. What is that one reason I request from each of you panel which deters you or not to enter into this, and putting this burden on the owners? Of course, this is ship owning in itself is a business, but I always say it's a derived demand. It's not a direct demand. Shipping does not represent in itself, there's no consumer. Consumers are you. So can I know that what is your one of the biggest deterrents which refers not you to invest into the ship owning or associated freight services? Thank you.
Let me recap that.
Thanks.
So, why do you not invest long-term into shipping, or at least go long into shipping and provide long-term charters, right? Yeah. Okay.
Well, I think the answer is what we discussed earlier in terms of how you employ your equity and trading houses, and I think that goes for most of us here, is it's not a strategic objective to employ significant equity into the ship owning space, which ship owners are doing better than trading houses probably, and they're structured to do it. So at least I think that's how I assess it. Yeah?
Okay, and we are long. We own ships. We take long-term charters. So we do embrace shipping. We're not sitting around waiting for the spot market. We take a view on the market.
Yeah, and we also take long-term charters as well, right? But there's only so much you can take. So again, we have so-called risk units, and so therefore when those risk units are full, you can't take any more long-term, right? Unless we start selling something against that. So yes, we may have grain coming in the future. You're never quite sure the seasonality of where it's going to be and the volume, so you cannot just go out and just have a huge, great fleet. So you've got to make sure you're managing that.
And let me just follow up in terms of, so why didn't we do from Trafigura side, why didn't we do this deal with specific ship owners? And the answer is very clear, because we have better optionality and better terms than compared to what any ship owner would give us. And that's the market dictating what opportunities are in the market.
Does that answer your question to a certain extent?
It's been addressed partly. What I see that there has to be a kind of a joint accountability or collaborative approach to the whole shipping, because I see that we are still not recovered from the burnt of the shipping since last 10 years. What has happened after the Lehman Brothers? So who should be taking the accountability for it? Can we tell to the bankers that they are able to give the easy money, or we just say the ship owners, they are going blind, or as a charterers, where all they are trying to service you? Thank you.
Was that a question or a comment?
Yeah, my question is that who should be taking the responsibility for this kind of volatility in the freight markets?
Excuse me, but
my question, my question is that who should be taking the responsibility of freight volatility being of such a degree?
Yeah, but sorry, Scott, but it's impossible for anyone to take responsibility of the volatility. The volatility is a result of the market, right? So I don't really understand where you're heading. Each company will have a different view on the market.
Appetite, when you're doing a billions of dollar freight, I think it makes much more sense that to have some ship owning exposure, where rather than having a ship owner going into it, and that can address the market.
Okay, I can only talk for our company, but we do take, we look at our exposure, and then we will cover i.e. via time charter or via our current or existing.
Yeah, I think most of the gentlemen here on the panel, they take long positions. Maybe not enough in your view, but they do. Maybe we can continue this during lunch if you don't mind. The time is up. I see it all the time popping up. So I would like to thank you. You also have to understand that being transparent and very open and being in the spotlight is not something which comes natural for trading companies. So I would like to say a big thank you. You have been very open and transparent, and I think it was a very interesting panel. Thanks for your attention.
Thank you.
Thank you, Frans.
Nice.